Okay, good evening, everybody. I just wanted to say thank you for spending this afternoon with me. Really look forward to having you attend this All About Credit webinar. The goal for tonight is to simply really just hopefully shed some light on how important credit is and to kind of elaborate with each of y'all how credit works. Not just how scoring's done, but maybe also share some tips and tricks with you as well. So a couple housekeeping items for tonight. You'll notice that you're muted. Obviously, this is for just respect of everybody. So phones ringing, different things like that. We've got people that are dialed in. We got people that are screen sharing. So I just thought it was easier just to go ahead and mute the whole thing. If you have any questions, please save those to the end. And you could shoot an email to info@mortgagegumbo.com, and we'll try to get your questions answered. You'll also see there's a little chat option there if you want to send at the very end. I will not answer questions just out of respect so I can get through the slides. I know everybody's time's of value to them, so we're going to try to keep this to a nice short 45 minutes to 1 hour tops so we could get you on your way. So just wanted to make sure we covered that. So again, my name is Dwayne Stein. I am, as you know, the host of Mortgage Gumbo. But hey, my daytime job for almost 24 plus years now has been mortgage lending and reviewing credit and helping folks out. And one of the things that I get most often is lots of credit questions. And credit to me is right up there with air and water. And I thought that's why it was important for me to kind of share some of my expertise with that. So as y'all can see on the opening slide here, I'd highly recommend that you sign up. If you're already not signed up, you can go to mortgagegumbo.com and sign up for the RU newsletter. Takes a couple minutes. Hopefully you've done that. But you can also follow us on Facebook at Mortgage Gumbo or Cross Country 2401. That's my franchise there. For those people that do that, whoever likes all three, you are going to win a prize. There's options of 2 prizes. There's a 4-pack to the Audubon Zoo and also a day cruise on the Natchez. So we've got some prizes. And all you got to do is go sign up for those. So with that being said, let's kind of rock and roll and get started here. So obviously what we're discussing with you tonight is the possibilities of home ownership. We have some folks that may also be able to, who may already have their credit. Maybe they are homeowners and looking to refinance. Or, hey, maybe you've got good credit and you just want to educate yourself a little bit. That's fine. That is exactly what we're here to do tonight. So the agenda is pretty simple tonight. We want you to know your score, and I advise what that is. Credit fundamentals. Really, we're going to break down how the credit score comes about, and we're going to share that with you. Facts about credit. There are so many different myths out there, so many different things that people talk about that I deal with on a daily basis that is truly just not fact. And then we've got a fun little thing of did you know? I'm going to share really just some things with you that I'm sure if you're like other folks, you were not aware that you can do to fix credit or kind of, I don't want to say cheat the system, but kind of make credit take advantage of it your way. So let's jump right in here to know your score. So when reviewing know your score here, folks, I want you to kind of see credit score is anywhere from 300 to an 830 scoring system. There's 3 credit scores. You have Equifax, Experian, and TransUnion, and we're going to get into that in a little bit. But what I wanted to share with you right now across the country, the average FICO score is a 687. Okay, so let's really start here and look at what we consider or what I have kind of labeled here as very poor. If you're between a 300 to a 580, that does not mean the world's coming to an end, but what that means is we've got to put a plan together for you. We've got to help you understand that right now you may not be eligible to purchase a home, but that doesn't mean that we can't get you ready down the road. So our whole goal, if you're between a 300 and a 580, our goal is going to be putting a plan together to get you where you need to be so you can hear the word yes. That does not mean we're going to turn you down, but what that means is we're going to put a plan of action together so we can make sure that you are ready to buy sooner rather than later. Okay? The next little dial on the dial there is what we consider poor credit. That's a 581 to a 619. Now, at this score, there's minimum programs that are going to be available to you. However, hey, your interest rate is going to be a little bit higher than what a competitive interest rate is, okay? If you're a veteran, hey, you're probably, and you have a 580 score, we're going to probably be able to get you approved in this area. But just understand that you're going to have minimum programs available to you, okay? And it's going to be at a little bit of a higher interest rate. But you're more likely to hear yes than you are at that previous category under very poor. Okay? You see where I've got the dial here as fair, kind of middle of the pack here, and there's a reason why. Okay, a 620 to a 679. Folks, at a 640, and you'll hear me talk about this on the radio show quite a bit. At a 640, I've got over 20 different investors that when you come to me, I'm going to look at seeing how I can get you approved. At a 640, every investor is available to you. Okay? Now, with the exceptions to jumbo loans, that's a little bit different. But if you score a 640, we are always going to try and look at the best options to get you approved or get you immediately at, if we can get you and you're below a 640, we're going to try to get you above that score to a 640. Okay? Because then I know all investors are available to you. Okay? Interest rates are a little bit more competitive than those two previous categories when you're between a score of 300 to 619. Now, you just heard me talk about getting your credit over a 640. When you work with me and my team, I don't care if you're a 739. I am always going to review what is the option to get you to that next tier, because a lot of times when we get you to that next tier, it either means an interest rate break, maybe a little bit less down payment, or, hey, maybe your PMI insurance and different things like that. So we are always going to be reviewing what the best options are for you, no matter what your score is. So we don't sit there and go, hey, you're a 579, let's get you to a 580. If you're a 739, we want to get you to a 740. And usually, so in that regard, okay? Next category, I've labeled as good. Good is a 680 to a 739, okay? This is very, very strong category. As you can see, the average FICO score falls into this category, okay? You are limited when it comes to jumbo because a lot of jumbos want you to be maybe 720 or 740 plus, but for most of us who aren't out buying a jumbo home, this is a good area where your PMI, as I mentioned, is a lot less costly, right? So it's much more affordable. If you do have to have private mortgage insurance, if you don't have 20% to put down, or as I talk about on the radio show all the time, cash is king. We want to keep as much money in your pocket as possible, okay? And then last but certainly not least, excellent category, a 740 to an 830. What you're looking at there is, hey, listen, not only are all programs available to you, but so are the best rates. And I like to tell my clients that are above this, hey, you walk on water, you part the Red Sea, you're dealing with Moses, so to speak. So a lot of options when you're looking at this, but when you're looking at this credit dial is what I call this, I want you to understand that at no point when you're looking at options to purchase a house, purchase a car, hey, a credit card or anything like that, you should make sure that you're always aware of what your score is and always be looking to see about improving on that score if you can, okay? And that's why really this next slide here is really sort of the meat and potatoes of how scores are determined, okay? So, hey, if you're on the phone and you're listening and you're not taking advantage of the screen share, what I want you to do is, from a visual standpoint, I want you to just draw a circle in on a piece of paper, and we're going to pretend as if we're eating a piece of pie. Because what I'm going to do is I'm going to break down really just the credit fundamentals for you, okay? And the fact is, folks, credit has changed over the years, okay? Due to everything that happened back in '08 and '09, credit really now is right up there with air and water. And I get folks who have a poor credit score and they come to me and go, but I've got $100,000 to put down. Investors aren't worried about that. Investors are now more worried about what is your ability to repay that loan. And credit is what determines future payments of it being available and you being able to do that. Okay? So your credit score is really, it's a reminder of, hey, good and bad decisions that maybe we've made in the past. And, you know, if I were to say raise your hand right now, and I'm sitting here raising my hand, and how many of us have maybe argued with the electric company or the cell phone company or the credit card company and said, oh, I'll show you. I just won't pay my credit. I won't pay my bill. Well, in the long run, that comes back to bite us. So credit is, hindsight's 20/20, right? So again, credit is a reflection of, hey, how much of that did you make good or bad decisions in the past? So what I want to be able to do this afternoon and today is, we all wish we had a crystal ball in life, right? So what we're going to do is, starting today, I want you to remember that, hey, you know what, that webinar that I was on about credit, that was really what kind of kick-started me, and a little tap that said, hey, here's what we need to do to move forward. So I want to give you sort of the crystal ball on how your scoring is done, okay? So let's kind of go through this. So if you're drawing here and you drew your big circle, I want you to draw your largest piece of pie, okay? Your biggest piece of pie, and I want you to write, and it's going to take up 35% of that circle, and I want you to write the word payment history. And for those following on the screen, you can see the green piece of pie here, payment history, that is by far our largest, right? So let's really get into this. And this is really very, very simple. While this is the largest piece of pie, it really doesn't get more simple than this is where it's determined on how well do you pay your bills. Do you have 30 days? Do you have 60 days? Do you have 90-day past dues? Do you have judgments? Do you have liens? Do you have bankruptcies? This is where that is going to be determined. So what I want folks to understand, the largest piece of your payment history is all about the largest piece of your credit file and your score, your FICO score is payment history. Okay? So that is a big piece. So let's get to the next piece here. And let's do amount owed. So this is 30%, so it's a little bit smaller. So if you're drawing, it's a little bit smaller piece of pie. Look at it from, hey, if it's maybe 20 after the hour. If you're looking at your piece of pie like a clock, it's 20 after the hour all the way to 20 minutes before, to the 40, right? That's this piece of pie, okay? That is what's called amount owed. So what that is, folks, is that is your balances versus your credit limits. This is showing me as a lender, me as an investor, how well do you manage your money, okay? You have heard me on the show. The number one place you want to try to get to is if you could get to 30% of your credit limit, meaning if you have a $1,000 credit card balance and you could get down to $299, you're going to maximize out your credit score for that particular trade line. That is the number that you always want to try to get to. However, when we're rescoring people and we're looking for 2, 3, 4 points to get somebody qualified where another lender has turned them down, we may look at that same credit card that has a $1,000 limit on it, and we may go, hey, they're at $799. Let's get them to $699, which is a 10% increment, and we might be able to raise your score 2, 3 points, which now all of a sudden gets you over a 620, which now you can go rural development with no money down. So again, that is the importance of making sure when you're hiring a lender, and I talk about this on the show all the time, You are in the catbird seat. So when you hire a lender, make sure that they are looking out and they're just not looking at a number on a piece of paper and putting you in a box saying, can't help you. Here's what your credit score is. Okay? So you have to understand that when you're looking at this, okay, this is the number one place that we look at first to adjust your credit score. It's number one. Okay? Because somebody, again, with a $302 balance on a $1,000 credit limit, score is not going to be as good as that person with a $299. And we're going to review all that and let you know that. Okay? So now, next piece of pie. Man, getting hungry already. Next piece of pie goes from, hey, 40 to, let's say, 50, to the 50 on a clock. So we're at 20 minutes till to 10 minutes till. Okay? And that is 15%, and that is what's called your length of credit history. Okay? This is, what do you have as old credit versus what do you have as new credit? And then what you're looking at there is, keep in mind, okay, old credit, folks, it's not a bad thing. You do not, and I want to repeat this, you do not want to lose old credit. And what I mean by that is so many times I see clients who have been, I guess, I don't want to say misled, but been told maybe something that is not true, and they're told to go close out hey, you paid off that bill, go close it out. If you close out a creditor or a credit card or something like that that you've been having for 20 years, that is going to drastically affect your overall score. Okay? The more credit you have, the more credit history you have, the stronger your file is going to be. Okay? It's that much stronger that your file is going to be. Okay? So please understand that. So, hey, here's a great trick. Let's say you're new starting out. Let's say you had a bankruptcy in the past, a foreclosure, and you're trying to reestablish your credit quicker, sooner rather than later. Hey, here's a quick tip for you. Hey, go get somebody that is already go become an authorized user, maybe on mom, dad, brother, sister's account. Become an authorized user to somebody who's had an open trade line for 5, 10 plus years that has good pay, and automatically you're going to get all that goodness because you're now an authorized user. So that is a quick tip to bump up that score. Okay? Next, let's look at new credit. Okay, so on new credit, now what we're doing is this is 10%. So now we're taking it from the 50 to 55, so to speak, on your clock. Okay, if you're sharing the screen, you can see it's blue. We're down to our last two pieces here. So on new credit, okay, new credit is something that you have to understand. Number one, are you applying everywhere? Did you just go get a new automobile, right? Because if you've not had any type of closed-end loans or signature loans and you go get a new automobile, that is going to affect your credit score. Okay? Notice I'm not saying inquiries. I'm saying new credit. Okay? Keep in mind, when we talk about inquiries, and I'm going to get into this because there's a lot of myths out there that I want to shut down about inquiries, but an inquiry stays on your credit for 2 years. So if you go over to Sam's and decide to get a Sam's card for the day because you want to try to save 10% that day, understand that that inquiry is staying for 2 years, and that inquiry not only is going to be on your credit for 2 years, show up as an inquiry, it's going to affect, that inquiry is going to affect your score for 12 months. Okay? And we're going to talk about inquiries in a little bit more detail, but I want folks to understand, because I hear lenders all the time. I get clients calling me who said, I want you to help me, but the person that I was working with said, if I get my credit pulled again, it's going to drastically drop my score. If somebody tells you that, know that you're working with a lender that doesn't have your best interest at heart. Because the facts are, that's how it used to be with credit, but now credit reports, they've gotten so detailed and they understand the data has been broken down so much that they truly, truly understand that when you having a credit bureau pulled for 30 or 45 days when you're making a purchase, it looks at it as one credit bureau pull. So it's not going to hit you 5, 10 points every time. During that transaction, it might be a 3-point drop or something like that. So I want to make sure, and we'll cover that in a little bit, but I want to make sure that that is, people understand. New credit is 10% of your credit report, okay? And then next would be types of credit or your credit mix. So this is taking you, if you're drawing this down and you're not screen sharing and you're putting this down, this is from, hey, the 55 to the top of the hour on a clock, okay? And understand, this is the final piece of pie, right? Everybody likes pie, so I just want you to understand. But what the credit mix or the types of credit means is, where do you have, what is your balance between secured versus unsecured debt, okay? So unsecured is great, meaning credit cards are great if you are managing them properly. But do you have maybe all you have is credit cards, but you don't have any type of signature loans or any type of loans that are installment debt, it's called, when it has a fixed payment tied to it. So maybe if you don't have that, that is going to affect your score because, again, what we're looking for is balance, improving ability to pay, right? Not taking out has 4 credit cards that they're using each credit card to pay off the other one every single month, because eventually that's going to come back to bite you, okay? So again, I just want to make sure when you're looking at this piece of pie, just to review, from the top of the hour to 20 after the hour, 35% is your payment history. From 20 after the hour to 20 before the hour or the 40-minute mark, that's 30%. That's amount owed. From 20 till to 10 till is length of credit history. That's 15% of your credit. From 10 minutes till to 5 minutes till on the clock, that's new credit. That's 10%. And then the last 10% is types of credit. So very, very, very important that folks are aware of what that is. And I wanted to really just make sure that I broke it down so you can physically see how your credit score comes about every single time that we're looking at it. Okay? Understand that. So let's get to the next slide here. Okay? What is my credit file? Okay? So here's what I want you to understand. What's in my credit file? All right? And I'm going to go slow here because I want you to be able to sort of take notes. And when I'm looking at a credit file, there's there's two things. There's what's used against you in your credit or to determine a credit score, and then there's what's not used. Okay? So what's not used in your credit file is what's called identifying information. There's going to be 4 bullet points here I'm going to cover if you're taking notes. Okay? So what's in my credit file? Number 1 is, and this is not used for reporting purposes, is identifying information. Hey, your name, your social, your date of birth, employment. Those things that are used to identify you are not necessary. Those are not used in your credit, but those are, okay, identifying information. Those are usually at the top of the report. They will show that you worked at certain places because most employers now are going to run some type of credit on you, and that's where that information goes, okay? The next bullet point is trade lines. This is your credit, okay? These are your accounts that you have either open, closed, or maybe disputing, which we'll talk about disputes in a little bit. But this is where lenders are reporting. These are your accounts. They're called trade lines on our end. Hey, how many trade lines, open trade lines do they have, okay? This lets us know what type of accounts do they have. Are they credit cards? Are they autos? Are they mortgages? So if somebody's pulled your credit and they go, hey, tell me about this student loan that's in deferment. That is a trade line. Tell me about this automobile. It looks like you missed a payment a couple years ago. That is a trade line. That's where we're getting that information to, okay? Credit inquiries is the third bullet point, okay? Credit inquiries, okay? So let's really make sure, I want to cover this, but this is where, as I stated, when you make an inquiry, it's going to stay on your credit for 2 years. However, for scoring purposes, it's for 12 months, okay? But credit inquiries, I want you to understand, lenders who don't have your best interest at heart are constantly trying to threaten you with this. That is incorrect. An inquiry is not like it used to be, where you went to an auto dealership and they ran your credit 900 times, okay? Inquiries now take about 30 days to 45 days, and they look at it as one single pull. So y'all should all breathe a sigh of relief, and if you take anything away, I'm not telling you to go out and go run up a bunch of credit and go apply for a bunch of credit cards. That's not what I'm telling you to do. But when you're making a major purchase, you would be silly to not see if I can do a better job than the next guy. It's that simple, okay? And then last but not least, as far as what's in my credit file, is public records and collections, okay? Now, depending on what state you live in, I see we've got people from Mississippi, we've got Alabama and Louisiana. There are certain statutes on how long that state allows an attorney or a lender to come after you and try to collect from you. That is different than what's reporting on your credit report. Usually judgments, liens, bankruptcies are anywhere from 7 to 10 years. They are going to report on your credit bureau. Okay, so I want to make sure that you're aware of that. So public records, collections, liens, judgments, those are going to stay anywhere from 7 to 10 years. So you got to be careful when you go to tell somebody to hit the road. Is it really going to be worth it? Now, sometimes circumstances like we had in 08 and 09, there was just nothing we can do. Okay? But now, so I want you to be armed to kind of know exactly how to handle these things. Okay? Next bullet point. What is a credit bureau? Listen, a credit bureau, it's pretty simple, okay? There are 3 credit reporters, okay? A credit bureau is what we call a credit report. There are 3 types of credit reporting agencies, okay? Equifax, TransUnion, okay, and Experian. Whenever a lending decision is being made, okay, the middle score is what is used. The high score and the low score are kicked out, and the middle score is what is used on a single borrower. If you're applying for joint credit, and let's say we have a borrower that has a middle score of 700, but the love of your life has a 622, we're going to have to use that 622. The lower middle score of a joint borrower is what we use when making a lending decision. Okay? So I want to make sure a credit bureau, there's 3 in a credit bureau. In every credit bureau, you have 3 different types of reporting agencies. And all of them, very rarely, maybe, and I mean, I pulled 10,000 plus credit reports in my career. Shoot, probably 25,000. You very rarely, I bet you on a handful of times, I've seen where somebody's score is exactly the same, all 3 scores. And the reason being is maybe Experian doesn't look at the collections as long as maybe Equifax does or TransUnion. So that's why, in fairness to you as the borrower, we always take the middle score. Okay? So that is what we're always looking at when we're making a lending decision. So when we're trying to get your credit up, we're looking at the middle and the lowest score and seeing which one's easiest to get up so where we can get that middle score to where you're qualified. So if you have a 700 credit score, a 639 credit score, and a 580 credit score, I'm leaving the 700 alone because it does you no good to get to a 720 with that 639, and I'm leaving the 580 alone But what I'm trying to do is get that 639 over a 640, because that's the next tier for a rate break, or get you to a 660. Okay? Next, I put credit inquiries to truth. Again, if you're dealing with someone and they're telling you credit inquiries, if you go have your credit pulled by somebody else, it's going to affect you. Folks, just understand, a credit inquiry, while it will sit on your credit for 2 years, okay, it will be part of your score for about 12 months. But if you're looking to buy a mortgage or buy an automobile and you're having credit pulled within 30 days, you're looking at 3 to 5 points. It's not like these folks want to scare you. So I want to make sure I just share the facts, show the facts and the truth about credit inquiries, because that is such a fib. And so many people call from the show going, can you do better? Can you help me? But the bank told me not to do this. That is something I want to make sure that I just really reiterate. Errors. How many folks have errors on their credit? Here's what I can tell you. We have almost 60-something people on this call right now. 25% of you. 25%. So that means 15 of you on this call right now have an error on your credit report. So I'm here to let you know that, you know what, I believe you. But what are we going to do about it? This is where you have to make sure when you're staying up late at night and you see these credit repair companies and all this, don't fall for the baloney. If you have a credit error, if you have something that is legitimately an error on your credit report, you need to make sure and initiate the dispute with the credit bureau company. The number one thing you should do is, whoever's reporting it incorrectly, you need to contact that trade, that person, okay, that you have the account with, okay, that debtor, so to speak. You need to contact them and see why is it reporting in error. Do not, and I repeat, do not dispute. Disputing a error on your credit report does nothing to help your score. This is the biggest trick that these credit repair folks do, and they charge you to do this. But what happens, folks, is this. When you dispute something, it automatically, that credit repair company will be able to say, hey, look, we got your score up 50 points overnight. That is for reporting purposes only. Okay? And we're going to get into the difference of what a soft inquiry and a hard inquiry is in a little bit. But that is for reporting purposes only. When you go to buy a house, we are going to require those disputes to be removed. So I don't want you to get a false sense of security. So the number one thing that you need to understand is, how do I dispute those errors? Biggest thing you need to do, folks, is this is why you've got to track your credit and make sure that you're keeping an eye on your credit every single month, or however you're getting it done, through a credit card, through your through one of your credit cards. For instance, I use Amex, and if something gets done to my credit report, I get an immediate notice. Immediate. Whether it's black market, whether it's somebody trying to steal information, whether, hey, you just made a purchase, I've got it set at $500. So if somebody tries to purchase something over $500, I can stop it right there. That's why you've got to make sure that there's too many free sites out there right now, whether it's Credit Karma, mycreditreport.com, any of these out there. There's too many of them for you not to know what's going on with your credit on a daily, weekly, or at worst, a monthly basis. But did you know on a credit dispute that you dispute with the credit bureau, they have to respond to you within 30 days, 45 days max. Max. That's why it's important for you to contact the person that has the error on your credit report. You have to contact them first. Then you have to get with the credit reporting agency and ask them, what do you need for me to dispute this report? And what they're going to want to see is, hey, maybe that letter from that debtor, maybe you've got proof of something showing that it was paid off. Maybe they still have it paid open. Maybe they closed it out too early where you show that you used it afterwards. There's a multitude of errors that can be out there, right? So then you may go, hey, I want to request that this is deleted or updated. To be able to do that, they have to respond within 30 to 45 days. So by you getting that, you're not going to want to dispute your error with Capital One Bank, with TransUnion, if it's Experian that has the reporting error. And the reason you'll know this is when you get your 3 scores, you may be at a 700, a 720, and a 585. You know something's not reporting correctly, and you need to check that out. So again, if there's something on errors, listen, it's very, very simple to do. Just contact the credit. You can go to Experian.com, TransUnion.com, or Equifax.com, and you can easily see how to dispute an error on your credit report. And the great news, like I said, they will usually within 30 days respond to you. Unless they think it's something that's just frivolous, or you're just going, hey, I don't think I should have to pay this, which I don't think any of us are doing. But I want you to know you are right. There are credit errors all over your credit report, all over your credit report. Okay? So let's go to the next slide here, folks. Did you know identity theft? Every 2 seconds. 1, 2, 3, 4, 5. Bam. 2 people have become a victim of identity theft. Listen, dumpster diving, phishing, trying all these certain things. You're being hacked. Data breaches. Hey, you remember when Equifax had a data breach a couple years back? Identity theft is everywhere. That's why I want to reiterate. Do credit monitoring, folks. Get updates. You have to protect yourself, because if you don't, folks, you are looking at something that is going to be an uphill battle and may take a lot of time to fix and repair. And we don't want to lose out. We don't want to lose out on our home. We don't want to find out when we're ready to make a grand purchase that something is wrong with our credit. And in today's day and age, there's no reason why you can't be having this monitored. But identity theft is another reason why you want to be doing that. Okay? So let's look at 30 days. Okay? And this is something I want to sort of share with you in regards to this when we're talking about 30 days. But what I want folks to understand is, and bear with me here, give me a sip of drink. 30 days when you're looking at it, that is not, the credit bureau does not report you as late. Hold on. The credit bureau does not report you as late until 30 days past due. So here is why I want to share this with you, okay? I understand that sometimes, hey, you may not be able to make your payment, right? But if I'm looking at a bill that's coming due, and bill number 1 is at 29 days past due, and bill number 2 is at 14 days past due, I am making sure that that one at 29 days past due does not go to 30, because that is going to go on your credit score, okay? And that is what we do not want to be affected. We do not want that to be affected, okay? So keep that in mind, folks, all right? So although you will pay, listen, you will pay a late fee. You will pay a late fee with your lender or whoever you have the loan with, but it will not report as 30 days past due. And that is what we're trying to do here, is keep our scores up. Okay? You could have a 700 credit score and be paying late payments all day long, and we never know about it because you're never going to 30 days. So I want you to keep that in mind. Okay? That to me is very, very important. I want you to understand that. Okay? And we'll get into some more tips in a second, but that is the easiest way. When I look at a credit report and I see some people are past due and they feel like there's so many times that, hey, 15 days is not past due. Look at your mortgage. The mortgages that we do, you're not charged a late charge. Your payment is due on the 1st, but you're not assessed a late charge penalty until the 15th. So you really have a 15-day grace period. Take advantage of that. Maybe call the creditor and say, hey, listen, can we change my due date from the 20th to the 5th? You need to take advantage of those things and know what your options are that's available, which is why we're spending some time this afternoon so you have that. Okay? Soft versus hard, folks. We're not talking about ice cream. We're not talking about taco shells here. What we're talking about here, again, is inquiries. There is soft versus hard inquiries, okay? A hard inquiry is when a lending decision is being made, okay? That is a hard inquiry. So you want to make sure when you have a hard inquiry, that is when I am pulling your credit. A soft inquiry is an employment application. A soft inquiry is you go to Credit Karma or mycredit.com, or when American Express every month sends me a copy of my updated credit report. Folks, soft inquiries do not count against you, but hard inquiries do. Okay? Hard inquiries do. Something else, let's jump back up to identity theft. Folks, it's okay, and I'm not sure if you're aware of this or not, but you can contact your credit bureaus and you can tell them that you want to put a hold on your report. And what I mean by that is you can call your 3 credit bureau companies and tell them to put a hold. So if you come to apply for a loan with me, you have to call and let those credit bureaus know that it's okay to release your credit to be pulled for the next 12 hours, or usually it's a 24-hour period. So you have to approve that. That is something that I want to make sure that I'm sitting here going through, and I just remembered, that is something that I do. I have my credit reports on hold. So if somebody has to pull my credit or somebody happens to get my information, they've got to contact me to say, can you release the information? I've got to give the credit bureau company authorization to release my information. So keep that in mind. All of y'all could do that, and there's no charge for that. You could turn around and do that this evening when you hang up the phone. Okay? We've discussed hard versus soft. We've discussed 30 days in that regards. So, all right. So a couple other things here. All right. And we'll sort of start. I want to make sure when it comes to credit, there's lots of myths out there. Okay. Hey, carrying a balance improves my credit score. Listen. Okay. There's a lot of credit card people out, a lot of Americans, over 43 million Americans hold a credit card balance. Okay. Over 43 million. Okay. That's 22% of people hold a credit balance. Okay. So does credit and carrying a credit balance improve your score? Okay. That is a myth. If you could have it at $0 or $10 every month, that's better than having a balance. But keep in mind, we always want to keep it underneath that 10% rule. So at $2.99 is better than you being at $3.02. But I don't want you to go, I'm not going to buy this piece of gum today because I'm going to buy a house in 2 weeks. What I want you to understand is this. When you're working with a legitimate firm that has your best interest at hand, we can easily fix that. So I don't want you to be strapped in your house or not be able to buy toothpaste because you're thinking about making a large purchase. Just understand when we pull your credit, hey, maybe that purchase at CVS that's got you over $300 brought you from $2.99 to $3.20. We're just going to get that back underneath if that's going to really even have made a difference. So again, that's where we go back and it goes to length of credit history. right? How long? What is your mix of credit? That's what we're going to look at. The other myth, folks, if people tell you just go get a secured credit card, that is not the answer to fixing your credit. We do that. We recommend that quite a bit. That is a great trick or tip, we'll call it, right? That is a great tip. However, it does you no good to go get a secured credit card if you've already got 5 credit cards right now that you're maxed out on and you don't have any kind of installment debt. And I see this all the time where someone that does not understand credit and just wants to give out advice and really doesn't know what they're talking about, they advise them to go out and get a secured credit card when the facts are that's not going to do them any good. Any good. Okay? Another myth. Income affects my score. That is baloney. That is baloney. It does not matter what your income has nothing to do. It matters with your ability to pay, which could affect your credit score. But whether you on Social Security making $600 a month, or you the man who's bringing in or lady who's bringing in $1 million a month, it does not matter. It's how do you pay your bills. So income has nothing to do with your overall score. Okay? And also, if you're married, your score does not, or your wife or spouse's score does not determine what your score is. You do not share a score. I want to make sure that I'm clear on that, as you do not share a score with your spouse. Okay? That's a couple myths there. Let me give y'all a couple last tips here that I want y'all to take away from this webinar. Okay? Let's say you're sitting at that $299 or that $302 on a $1,000 credit limit. Maybe call your credit report, call your credit card company, ask them for an increase in their credit limit. Take that credit limit from $1,000 to $1,200 to $1,500. So all your credit cards that you're looking at right now, call every one of those folks tomorrow and say, can I get a credit limit increase? You will see immediate score improvements if you're able to get that. Because what's going to happen? Your credit limit utilization, or the second biggest piece of pie, the amount owed, is going to immediately go down. Okay? Another tip. Become an authorized user. For someone who has established credit and a good credit history. Do not go become an authorized user on boyfriend's account and he's not paying his bills. Or he just had a foreclosure or just came out of bankruptcy. Find that friend, find that cohort, find that family member who's been having that Sears bill since 1975 and paid it like a champ. Become an authorized user on their credit report. That will impact your score immediately because that history will now come over to you. And that will help impact your scores. Okay? If you have limited, and I want to repeat, everything now I'm going to talk about is on a case-by-case basis. But if you have a limited revolving debt, maybe consider opening a secured card. Meaning, do you have 1 or 2 credit cards out there? Maybe a secured credit card will help you out because that's going to immediately give you, it's going to be new debt, but it's going to show that maybe you've got the ability and it's going to have your credit limit is going to be much better. Now, if you go open up a secured credit card and you use up all the money on it, you just put yourself in a worse situation. That's why we use that, but we're very careful on how we educate people on how to use a secured credit card. It's not as simple as, hey, go to the bank, pay $300 and get yourself a secured credit card. That's not how it works. The other thing with a secured credit card, folks, is please make sure that you're going to someone who reports to all 3 agencies. I've seen where somebody working at a bank goes, we'll give you a secured credit card, and they only report to 1 agency. That's not helping you. Because we need 3 scores, and we take the middle score. If you only have 2 scores, we take the highest of the 2. So guess what? we need it reporting to at least 2 of the 3 credit bureaus. So we want it on all 3. When it comes to collections, when it comes to judgments, if they are less, most of the time you'll hear me on radio and I tell my clients, let sleeping dogs lie. And what I mean by that is if they are over 2 years, a lot of times we leave them alone because they've already knocked you in the knees and already brought you to the ground and have affected your credit score. However, if they are less than 2 years, or even if they're over 2 years and they're very small, maybe you want to call that company and see what is it going to take for me to pay this off. Maybe you settle with them. But what you're going to do as importantly is when you settle with them, this is where you're going to want to get them to say that they are willing to give you a release. Which means, hey, not only are you going to settle with them, they're going to remove that from your credit altogether. That's right, folks. You can get a judgment or a collection removed from your credit report if the collection companies are willing to do that. Chances are, if it's been turned over to an attorney, which means it's usually over 2 years, they're not going to do that because that's how they get paid. But if somebody puts a judgment or a collection or a lien against you, call them. See if you can work out something, an arrangement with them. But when you do that, see if you could get them to give you a release so that way you can have it. You now send that over to the credit reporting agency or you bring that to me as the lender and I can get it deleted from your credit report and you talk about your credit score will shoot up. Because now we went from having a judgment less than 2 years that's really just hammering your credit to now it goes away altogether. So there are a lot of different things out there that I want to make sure that I'm sharing with you. Okay? We got a question here that says, Dwayne, have my spouse, her credit is not that good, my credit is exceptional. So as we discussed earlier, okay, when it comes to lending, you have different options. If you were to take on a government type loan, which means an FHA or a rural development or a VA loan, and that significant other or your spouse is going to be on that credit, on that loan, we don't have to count their score. However, we do have to count their debts. So let's say that that spouse does not work or works and we have to count their credit, meaning their debts, not their score. If you do a conventional loan, so a lot of times if we have a client that comes to us and maybe spouse went through a divorce and things went bad previously and they're remarried and they want to buy a house together to start their new life. Well, if spouse's debts are not where we need them to be, what we're going to do is we're going to do a conventional loan, and in the state of Louisiana, the spouse is going to be required to sign. They're not on a mortgage, but they're on the title. So we want to make sure, because there's a big difference in that. Okay? So that's there when it comes to credit in that regard. I hope that kind of answers for you a little bit, and I'll send you a personal email as well. Okay? Let's see here. Can I get a RF? You must have meant an RD. Can I get an RD loan with credit under a 640? Absolutely, you can. Again, this is where we separate ourselves from other lenders. We have programs where we are allowed to be able to help you. Okay? We're allowed to be able to help you. Let's see what Judy just put here. Does getting a credit consolidation loan with, say, Lightstream hurt your credit? It depends, Judy, on what you are consolidating. These companies out there, you have to be careful on what are they consolidating by putting all your debts together and giving you a lower payment, or are they consolidating because they're going to negotiate with these lenders or these people that have given you a loan and removing or lowering the balance, i.e., instead of paying you $1,000, what if we give you $500? Keep this in mind also, folks. Anything that gets written off, if anything that gets written off, anything, and I'll answer that in a second, Judy, anything that gets written off, that counts against you, and you have to report that, folks, on your taxes. Keep that in mind. Okay? If I get a limit increase with the credit card company, will that use a hard inquiry, and would it be worth it if they do it? Absolutely, it would be worth it. Yes. Yes. But I would ask them, what are your requirements? If they're going to want to see, if you're unemployed right now and you're not working and you haven't paid that credit card in the last 6 months, I'm probably not asking them for a credit limit increase, Justin. However, if you know that you've been paying them well, then look at it. Or if they've sent you something going, like I got something from American Express the other day. Hey, for the next 12 months, you have 0%. Hey, you know what? Great, thank you. I didn't ask for it. That's what they're giving me. But also be leery if they go, hey, you don't have to make a payment next month as a courtesy. They're still going to charge you interest. Okay? So, hey, it looks like that's all the questions. Folks, I really appreciate it. If we get any more to info@mortgagegumbo.com, I'll be more than happy to share that. If you want to send an email to info@mortgagegumbo.com, I'll be more than happy to resend this. I'm recording this audio, so I'll be more than happy to resend this out to you as well. I really, really, truly appreciate y'all as listeners. I appreciate the opportunity to do this. Stay tuned. We're also going to be having a home buying webinar in the next 30 days that we'll be having where, again, you could pop a top and enjoy from the comfort of your own home. So, again, thank you so much. I appreciate the opportunity. Best of luck. Enjoy your family. And if there's anything that me or my team could do, hey, please don't hesitate to give me a call. I'll leave this slide up right here for you for the next couple minutes. Thank you very much. Have a great afternoon. Bye-bye.